Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, July 3rd, 2025. It's 9:57 a.m. Eastern Time, so we're about a half hour into the trading day. Just another reminder, today is an abbreviated trading day here in the U.S. With the markets closed tomorrow. So it's typically one of the lightest volume days of the year. Take about anything that happens today with a massive grain of salt. In other words, it's usual to see whipsaws, even some volatility. We're up right now. We could be red at the close. But again, try not to read into much that happens on low volume trading days. All right, so what we're going to do here is focus on trade ideas. There's been a couple. I've been doing this lately. I try to do it from time to time, going through the comments in both chart requests, comments, replies, and there's been some really nice trade ideas shared. So I thank you guys for that. I'm going to go over those and both those trade ideas, shared by those on the site here, subscribers, as well as some that I've shared recently. Let's do this. Let's start out with, I just have it kind of scratched on my scratch pad here. Let's start out with the miners. And again, I mentioned this the other day. I covered the lithium stocks. It's just a low volume indicator. I'm looking at some different stocks. Maybe I'll get to that later. So I highlighted both GDX recently as a short trade. Big divergences building. Remember, we hit that first target there. I have additional downside targets on GDX, both on that daily chart we're just looking at, as well as a 60-minute here. And then I did a video on the lithium stocks, bullish on those the other day, and somebody asked, how can you be bearish on gold mining stocks, gold and silver, and bullish on lithium? And again, my reply, I already think I covered this in the video as well. One has nothing to do with the other. Two different types of metals coming from different places in the ground with different supply and demand dynamics. So, and either way, you need to see this level go. And I've covered that. I don't want to go too much on a tangent, but I've covered the dollar recently. We need the dollar to break out, hold that key support level it's at, long-term support. And once that, if and when that happens, the dollar starts to rally, then most likely gold will break down from this big multi-month trading range. So gold's been a completely and utter dead money trade for a while. And the direction that it breaks from here, a lot like I was saying in the stock market back at the beginning of this year and the end of last year, we had a trading range. I recognize that. I expected a downside break. And I went so far to say that if we got an upside break, that it would likely fail. Now, the reason I say that, usually these trading ranges, and they're indecision patterns. And when you go sideways for a while, longer you go sideways, I use the analogy, it's like a coiled spring building energy. And typically, the way you break, the direction you break is the next tradable trend. However, when you have a similar technical posture, exactly like we did, if you recall, back in the stock market, leading right here up to the highs, it was very clear that I kind of gave you just all down arrows. I said, look, if we break to the upside and we popped it ever so slightly, it'll be a marginal new and still divergent high, and that breakout will most likely fail, which it did. So I have the same, based again on technicals. This is what I do. I have fundamental analysis goes into my thinking, and that's what we're doing with the dollar. That's a hybrid of fundamental and technical analysis. The technical analysis on the dollar, of course, is the fact that we have this bullish falling wedge, and we have the dollar via UUP right here, the dollar index, at long-term support at the bottom of this trading range, but with positive divergence. It makes me think that even if we break the trading range, just kind of like gold in reverse, that it'll be a false breakdown followed by a recovery back above the range and then a rally up into. Now, anything else, then I'm wrong, and that's what stops are for. So right now, there's really no actionable trade. You can, but we're not going to see any movement. Gold's been in a trading range, and will most likely remain in that trading range until this clearly starts to move up. And every tick higher, more and more then become aware of the breakout and the rally in the dollar, and then the impact the dollar, rising dollar, will likely have on gold. So again, it's not right now, it's just kind of a go nowhere trade. But and I just showed you GDX. So let's go back to lithium, LIT, and then I'll move on to the next trade ideas. In the most recent update, I started covering the lithium stocks right here. Where was it? Right here. About a week ago, June 26th, right here. And then this is the video. I'm paused right here in the 19 minutes, 17-second mark, stating that we already broke out, which is bullish above this downtrend line. So that was an objective long entry with the next buy signal coming a break of this resistance level, 33.39. And then all the better when you take out the 200-day moving averages. Although you've traded through the 200s, these are the 200s here, the red and blue line. Either way, a break of that level should open the door for a move up to there to that $43. Let me go to the live chart. And that's it. So I wanted to reiterate, this has been, so I highlighted these right here on the 26th. We were right there on that, the breakout candle right here. We were just starting to break out. This is textbook technical analysis or trading 101, breakout, followed by a back test, which was a successful back test. We started moving higher, and now today's breakout candle above that really nice resistance. So this is an objective add-on or new long entry. And so, nothing big so far, and that's just the ETF, but you're up about 5%, and you're beating the market. And that's the kind of the theme here. A lot of people, and I do but don't get me wrong, I love trading the indexes, but mainly for when I'm using futures because they're tax efficient, more tax efficient than individual stocks. However, the money to be made is in individual stocks, and I'll go over, some of those recent trades where, just about all the long trade ideas in the last couple of months here are just blowing away the market by a multiple of many times. So including this one, this is, and again, it's more upside to go. When I go to the individual lithium stocks, which I did back then, again, that was on the 26th, right about here. A lot of the individual stocks that I highlighted, are up 10% or more. And like I said, some look better than others, but they're whatever. It's a sector that's moving. There's individual charts. ALB coming up on that first target there. I gave you a 70.85. Some of these are Canadian stocks, and some also have U.S. symbols. I went over some of the Canadian Venture Exchange stocks, but a lot of these also have U.S.-based ones. Or you keep it easy and trade LIT. So that's it. Let's move on. Let's go to another sector that I've been highlighting as both swing trades and long-term trade ideas since last year, one of my favorites, and that is this sector here, the agricultural input stocks, and they just continue to go. So again, these were highlighted, could have been late 2023, early 2024. I'm going through these as I often do. If you're new to the site, typically when I go through a sector or an ETF, whether it's a sector ETF or an index ETF, I have my components sorted by market cap. And I say that because it's important. I cover that in a sector like this one, as well as the lithium stocks. The big ones are your bigger names. This one's a $51.5 billion company. You have a lot less risk holding and trading a $51 billion company than you do trading down towards the bottom. My smallest one is NITO, and that's a 4.4 million. There's probably people listening to my voice that could write a check and buy this entire company at a $4.4 million market cap. Tremendous amount of risk. It's a penny stock. So, I said that during the videos, and it bears repeating. And if I don't mention the video, just know that when you get down, if I throw out, and I encourage everyone to do their own due diligence. There's a lot of nuances and things to know about trading. I try to share all these things with you, things I've learned over the years. And one of those is, I call it know your security rule. Meaning whatever you're trading, a security is something that trades, a stock, futures, contract, options. Know all the ins and outs about it. So I try to do my best to point out which ones have higher risk. But typically you can just look at the market cap and know that a bigger company inherently has a lower risk, lower volatility. You can also just take a look at the chart, go back a couple of years and to get an idea of the volatility. It doesn't take a rocket scientist to look at certain stocks and see that some are much more volatile than others. So either way, this one just continues to power higher. I gave you on my favorites, you had price targets all the way again back from 2024. This one, NTR, I just want to point out, these, this is a sector that has bottomed, and it still looks good. So again, I can't, these were highlighted in multiple videos, but from when I first, let's see, I can tell you, I graded that back on November 5th. So 2024. So that would have been right about here somewhere. And I'm trying to just measure it for you. So far, we hit our fourth target. It's about a 26% gain. And again, these charts, if I tweak or change targets, I'll tell you. This is TA 101. So we went to T4, we punched on through it, but we're getting very overbought. You can see we had some negative divergence. And even in a bull trend, negative divergence causes corrections, not permanent trend reversals. And that's what we got. So you got the divergent high, set this one back about 11, almost 12%. But look at that, perfectly right to my third target level. Remember, the price targets I list are resistance levels that I expect typically upon the initial reaction, expect a pullback. So you can swing and trend trade the heck out of these things using my targets. And so the point is, if you effectively game even a little bit of the pullback, take your profits, game a pullback, and then recycle back in a lower cost, you turn a trade that has a gain of so far to that recent high of about 35%, you can turn that into 50+% easy by either sidestepping the give backs and then buying back in lower, or turn around and gaming these pullbacks. Again, these targets haven't been modified or moved. You can see the pullbacks off each level, including that one. You had an initial pullback there, created against it, punched through, but there was a lot of hot air between my fifth and final target. Again, I just moved it over, dragged it over to the right, but it was created back. That one was added back on May 25th. When this sector started to get some traction, I added some of these targets. And that's it. So pull back to that 57, 56 T3 level, and with a divergent high, but the PPO is still in bullish territory. This zero line tends to delineate bull and bear trends. And so that's it. So let me go over the rest of these. CF gave you a T2 back there back in 2024. T1 was hit, so we were along somewhere off this divergent lower, the breakout there. T1 hit, pulled back, held support here at 69, and recently broke this trend line. So a lot of these got a little hot in the near term, had nice corrections back to support, and are now moving up. And all the better if the agricultural commodities that we've been looking at, which time permitting, I'll get to those. Wheat, corn, soybeans still look good. Longer term, still very bullish as both swing trades and longer term trend trades. And these guys, I think there's some more upside here. MOS, one of my favorites back then as well, in multiple videos. Big divergent low. T1 hit, T2 hit, T3 hit. Nice pullback to T2. We're getting extended, and I actually updated that one just a couple weeks ago right there, and I told you, you can take profits there, or if you want to just tighten it, stops, have a stop set right below that trend line. If you did that, either stopped out or reversed, shorted, you would have gone down. You dropped about 10% from the trend line break. You could have turned that into a 9-10% profit on a short trade to enhance the gains on this trade. And then that's the obvious logical place. T2 was my second target. That's where they hit, bounced. Now we're back up against at T3 again. We already hit it once, so if we can power on through, that should take us up to my fourth and final target zone. And who knows, maybe I'll give you a level now. If these guys continue to get traction, I'm just going to write right here, potential T5. So I'll revisit these. And if I don't, as always, and you want an update, I don't get a lot of comments on these, but let me know if you're in them, and I'll be glad to let you know if I think we're going to continue on up there. ICL had already hit my final target. That was T4. So again, wherever we were, T1 was originally created on November 5th, right here. It's the beginning of November, right about there. So we went up, hit T1, T4. That's about a 56-7% gain right there. Big negative divergence. Certainly wouldn't be chasing this or really any of them here. These are more updates for those in there. FMC, this one never broke out of this trading range. There's an example where you had a downside break of the range. They tried to get back up in there, got rejected, but it's just recently put in a divergent low. And just like the stock market, now this is going to be my common theme as I move forward to some of the more recent trade ideas that I've thrown out to you, and I've stated this recently. This is a time where I wouldn't buy the major indexes with your money. And that's mainly because they're in an uptrend. There's no sell signals right now on them, but the RR is just shitty, in my opinion. It's not favorable. Tremendous. And again, we can look at the charts. I'll get to those trades in a second. We can blow away the indexes right now by buying better looking stocks that have much more constructive patterns. Those with divergent lows at support, beat down brand names like the Pepsi we are in, and Lululemon, and Churchill Downs, and you name it. Some other ones, Estee Lauder, somebody threw out the other day. We'll get to those in a second. Just infinitely better are our profiles on those risk reward. In other words, 1 unit of profit, or 1 unit of loss compared to 4, 5, 6 units of profit potential. All right, so this one needs to pop this level right here. Oh, where I was going, and so what happens in whether it's a bull market in the stock market or a bull market in the sector, as I've just pretty much showed you here, the sector, as I'm going through these names in order, the biggest ones, this sector is certainly in a bull trend right now. And what happens is, just like the stock market, people, when you get that FOMO thing going, and then just everybody's bullish, and you get the latecomers coming in, they start chasing the crap because the big names are already so stretched, so overpriced. The charts don't look good. Think of the Nvidias of the world, and Broadcoms, and Meta, and Microsoft, and so they start going after the crap stocks, the lower tiered. Or the good name stocks like I just mentioned. Pepsi's not a crap stock. Lululemon's just a great solid company. Had their stumbles recently, and therefore that's what, from my experience, you're going to get more bang for your buck. So that's a common theme there. All right, and the same thing here in these sectors. If, and that's a big if, all these things are big ifs, but if the momentum continues in this sector, you're going to have more bang for your buck in these lower names, especially those that have now come full circle. Now, keep in mind, when I go down, this one's a $5.4 billion company. So it's still a multi-billion-dollar company. But as I get down in the group here, Scott's Miracle-Gro, if you're a homeowner, you're familiar with them, yard fertilizers and all that other stuff, plant fertilizers, $3.9 billion. But look, nice chart, back here, I had made clear when I did the videos last year, it was not one of my favorites. But now it's certainly a way better looking chart because, number one, the sector, it's clear now the big leaders have been rallying, and this is where people start to come in value. But look at that, just triple bottom low, my kind of stock. Why? Again, some of these lines disappear on me, but or I might not have had it marked up back here because I wasn't following it right then. Positive divergent low at support. And it's already up about 55%, blowing away the stock market or anything like that. But right at the 200-day moving average, although it's done a decent job. Here's the 200s, support there. Then we broke below it. We need to clearly put the 200s in the rearview mirror on this one. But either way, again, a better looking chart than the stock market or most of the big tech names. UAN, this is CVR Partners LP. Don't ask me how they came up with the symbol UAN. Maybe they had a name change for it. Look at that support. Great support down here. And finally, if you look at this, it's been a basing pattern, which it's, a little more work. Right here, you can see that was a target I had, 93.80. It just hit it, pulled back. If it can punch through that, it should open the door for quite a bit more upside. So there's a CVR for you. It needs to take out 93.80, but you can also buy a pullback to this 83.60 level. IPI, again, was one of my favorites back here. Getting these targets. T1 created back in November 5th as well. November 5th. So right here early, somewhere in there. T1 hit, popped that trend line, hit T1, T2, and T4 zone, but I still have these additional zones I gave you. And look, here's a great example. Look at that. T4, the top of my resistance zone. Look how many reactions there. And that's why it was a resistance zone. We traded around. Look where the pullback went to. And again, these levels have not been modified right to my T3, so provide an objective entry. So this remains the same. If you, a stop, an objective stop, if you want to keep a tight stop a little bit below, maybe on a daily close, or just give it a little room. If it takes that out, it may fall back down to the next support level. Otherwise, this is an objective long entry, as would be a pop above 30, my T4, top of my T4 zone. And you know, the fact that if you zoom in really, really close, you had a couple of ever so slight pops above. So you want to round that up to about 39, and then a pop above 39 should do the trick and take you up to my next targets here. But this is, you know, this is clearly, you don't have to be an expert market technician to look. This is a downtrend. A downtrend is simply defined as a security making lower lows and lower highs. This is an uptrend, higher highs and higher lows, right? And so that's that. BIOX starting to look good, divergent low. We're getting down to the $288 million company, so low price, but those low price ones can really run when they run, especially if you get that kind of final frenzy going in there with the speculative traders coming in and buying up the low price stuff that hasn't yet participated. LVRO, again, getting down to $244 million company, but you have this big wedge right here. And you just have higher profit potential, but also higher risk that you can wake up to something like a bankruptcy announcement on one of these smaller ones. So, you know, how do I do it? I take smaller positions. That's it. Because if I'm, you know, if this thing breaks out and gets some traction, I'm going to give you two targets right now. Right here would be my first target. And from where it's at today, that's about a 56% gain. And right there would be my maximum target. That's 140% gain. You don't have to put a lot of money in to make a nice dollar profit if you get 140% gains. So you put a small amount, what I call Vegas money, enough that if you wake up, and again, it's part of, and I continually harp on this, and I don't think, you know, the message sticks, at least not with everybody, that diversify the, you know, QQQ or GDX or any sector trade is just one of many positions. And so especially if you're going to gauge a sector, there is, to the best of my knowledge, not an ETF that tracks the agricultural input stocks. So your only option, at least that I'm aware of, and the way I've done it for years, is I take a shotgun approach, and it looks something like this. I'm going to pick the most, you know, my favorites in the sector, and these little circles. So this would be my exposure, which is a small piece of a pie of overall portfolio, both in long-term accounts and or active trading account dependent. And so this is my total exposure here, the big circle to the ag input sector. And within there, the you know, my favorite stocks with the best looking charts and the larger market cap warrant a larger position size. These small speculative guys like this are these smaller positions. And back early on, some of these weren't setting up right, so I didn't give you price targets because I didn't like them. And now that's what I'm trying to tell you with the stock market too. We're at that kind of late stage, and so you get what I call a dash for trash thing. Look, and you can see these are all potential targets too, right here, up to that $7 level. So the potential, again, if this thing can get some legs, 252%. AVD, divergent low 1. It's not as if it didn't, you know, pan out for anything. It was a 53% rally, and now divergent low 2. So this one I would have more recently, back in June 4th, just almost a month ago today, is when I started highlighting this one and gave you these 4 price targets. So we're coming off that divergent low. So far, nothing huge, but we put in a higher low. The potential early makings of an uptrend. We have a series of higher highs. Now we need to pop this $5 level. That's a big level. If I don't already have it, which I probably do, I'm going to set an alert. And that pops that, probably explode up, hit my first target there in short order. That would be a gain. T1's the downtrend line or the 662 level. We'd probably shoot through the downtrend line intraday, hit that 662 or come close to it. About a 33% run, and then if we hit my fourth target, you're talking about 130% right there to T4. Seed, also low price, $119 million company. Penny stock, 98 cents. Just hit penny stockville, but what happens, these companies, they come in, the big major shareholders in the company, including the executives, they'll do what they can to defend that $1 share price, because if they trade below a dollar too long, they face a delisting. I believe, if I'm not mistaken, this is a Chinese company. But again, we'll be singing Kumbaya with China sooner than later in the trade wars. I predicted it back when the world thought everything was going to come to an end. I said Trump would back off because the two biggest economies in the world, China and the U.S., it's mutual destruction to continue this. So they'll figure out the tariffs and all that. So either way, look, I'm just showing you, here's the chart. It's got a big divergent low. Buy signal could come in various forms, candlestick reversal, anything else, or just watch it. You start to get some upside momentum, and you start to see those lower names participate. This one has more upside, quite a bit of upside. ENFY, divergent low now. So a lot of these crappy ones, the lower price ones, are finally putting in some divergent. Look, this one did have a divergent low back here. I would have highlighted that. It did rally, and it rallied about 73%. So again, low price guys are going to move more. Let's move on to the next group of stocks. All right, let's go back to the home page. Let's do it this way, and then I'll wrap this video up. In order of how I've covered these, you have Churchill Downs. I'm just going through in reverse order here and covering some of the recently highlighted long trade ideas. So CHDN, we hit price target yesterday. T2 hit. We nailed the bottom on that one. Went up, hit T1, came back, went, we hit T1, pulled back, powered on through there, pulled back to it, giving you an objective re-entry or add-on, and now hit T2, and that's still the potential third target, although I favor a reaction off this level. We haven't got much of one yet, but we're still effectively right on it, and my target was at 105.06. We're at 105.49, so, but it also, if the market has some kind of hot air. Oh, let me give you a trend line if you're looking for a stop, if you are going to hold out to T3. Personally, I had a sell limit order, so it took me out yesterday. I'm not shorting it, but I may re-enter later on. We'll see. But I'm not crazy about the daily. I did like the weekly. I gave that to you when I shared the trade idea. It was at long-term support right here. And so just to kind of give you an idea, I know we bought it right off the lows, give or take. So what did we make? 20%? Again, or no, actually, maybe I can't remember where it was posted yesterday. I post so many trade ideas, I can't tell you where everyone was there. All right, somebody asked me today about two stocks, Jack and Donut, Jack in the Box and Dunkin' Donuts, and that was Pale Flame. Right here, where is it? Yep. Jack and Dunkin' Donuts, Krispy Kreme. So here's Krispy Kreme. I said nice divergent low. Again, I wish, and don't get me wrong. No, I'm glad you brought these up now. I just said I wish I would have saw this one back here. That was a beautiful, my kind of chart. Bullish falling wedge. And again, the common theme in this video is these bottoming plays. This is Krispy Kreme, crowd favorite. DNUT, beautiful bullish falling wedge. So these are the ones, as long as this game of musical chairs, is the music's playing, i.e. the stock market's above, breaking out to new highs, you're going to have tremendously more upside potential in these bottoming plays than those that are, already overstretched, like the, NVIDIA's of the world. So since and look here, so basically my analysis, I said, and you can read it, go to the comment section. We'll probably get a reaction there. That's the bottom of the gap. There's your big old gap. Traders will usually sell that, take profits. Big volume. This is what you want to see on a breakout. Impulsive buying. So once the breakout came, let's go to the live chart. DNUT. Yes, you don't chase a stock that's up in just a matter of a few days, 30%. I don't chase a stock. I will wait for a pullback that provides an objective entry. Where to? I'm going to add a level right here so you can see there's some support, price support about right here, about a little above $3. and if it kisses the gap and then pulls back. So ideally, you want to see it work off some of these near-term overbought conditions via pullback or some consolidation. And then once it enters a gap, probably backfill it. Technically, the top of the gap is right here, but you can see I put my first resistance there just shy of $4. That's the next target, and 461, then 533. And then may want to come up and visit the 200-day moving averages ultimately. The same subscriber, Pale Flame, also asked me about Jack in the Box. So it's another one of the type of longs I've been comfortable with and posting here lately. Beat down, well-established brand names with constructive charts for bottoming plays. Really, what I wrote are bear market rallies. That's all this is. Dunkin' Donut, you can't. This isn't up for debate. This stock's in a bear market, as many stocks are. If you strip out AI and tech, you see still a lot of stocks are in bear markets. So going back to that one, Jack in the Box, nice looking chart, bottoming play. There it is. Positive divergence right there. Hasn't yet broken out. My first target is 2205 and the intersecting downtrend line right there. Once, if and when that's broken, second target just shy of 26, and third target I would sell just below that 29-ish resistance, and then fourth and final potential target, the downtrend line there. So that gives you, again, if it pulls back or not, at least, to that third target about 43%. And if nothing else, I don't know what's going on with Jack. Oh, look at that. I didn't miss that, didn't I? Beautiful. Beautiful. That's a major reaction low. You see that. A blind man can see that reaction low right there, and that's right where we came to. So again, I wish I would have seen that one the other day. I would have gained that bounce off that level right there. But either way, it's still a nice setup. Maybe pull back, and as long as it holds that support level. And sometimes these stocks, they like to just take a little run down below to blow out the stops, suck in some short sellers to give the fuel for a bigger short cover and rally. But either way, so in that area, just again, this is a lot more upside than many of the big mega cap tech stocks right now, in my opinion. And again, I use the term a game of musical chairs. The music is playing. When the music stops, meaning if this breakout fails, we start getting some pretty good sell signals and evidence to re-engage the market aggressively on the short side, then that the gig is usually up. It may continue for a little while, but that dash or trash, these stocks are beat down for a reason. Jack in the Box, for whatever reason, I don't know. I don't even think we have them here where I live. I know they're big around the country, the chain. There's a reason that stock is down almost 90% from the highs and peaked back in 2021. Believe you me, the market is efficient in knowing that. So, there's something wrong with this company, or has been. Maybe the future's bright ahead, maybe not. Again, it's bear market rallies. That's all. I don't care what the reason is, but the charts are constructive. So what else do I have for you? Let me just go through the recently mentioned ones. EL, that one, somebody asked me about EL recently. Props to you. Estee Lauder, again, I covered this just the other day. We just hit, where did I first show it to you? Right here. Here's the chart yesterday. So we're at gap resistance. So my preferred entry would be a pullback here. You don't always get what you want, but we're still right at that level right now. And so that would be the ideal scenario because we're very overbought near term. And then again, another bottoming play of a well-known, well-established company with a lot of brand name recognition there. What else do I have for you? MOH, I just threw out yesterday, kind of a catch a falling knife trade. The stop is on a daily close. This sector may need a little time to base out here. But again, that was also based on long-term support here. And I think we can probably rally up on above there. Where did I go? There it is. All right, so that's the weekly chart. And that meshes with that other one I gave you. It's in the same sector, the healthcare plans, OSCR, back testing the trend line. That's what's happening here to my charts. Something's going on. Okay, back to the daily chart. So we'll see how it closes the day, and we can play around with that line. Effectively a second day of back testing there. And so again, that one we took here, so it's still very profitable. And if this sector can get some traction, we should run on up to T2. If not, that's why I raised the stop for you. Initially, we took it here, and I had a stop down here somewhere else lower. And that would be, if anybody that took it yesterday, that's just an ideal stop. All right, next up will be Lululemon, another brand name. Not much to say about that. Again, this one was shared by a couple folks on the site. Rugi and Alan both had shared this one, had inquired about it. At the time, I didn't have much opinion other than there was a nice downtrend line to trigger long entry. Then I highlighted when it did the breakout. There's the breakout, and whatever. We hit T1. We're stalling out. It's been the third day we're trading on that level. That's a reaction in time, the more bullish of the two, versus a reaction in price, meaning a pullback like that. So if this one can power up T2, T3, and then if a potential T4, it needs to enter this gap, big old massive gap right there. But as you can see, even though technically the top of the gap's right here, I think a lot of traders are going to be eyeing that gap right there. And so therefore, that's my final and potential final target. And then last but not least, one of my favorites, again, for just kind of conservative stuff. A lot of times I'm hitting these, high flying stocks and crypto and gold mining stocks and things like that move, natural gas, things that can move 10+% in a day. This is boring old Pepsi, but again, I've got that little Warren Buffett thing going on right now with, just, feeling more comfortable with these trades, especially not just a random, let me buy a beat down blue chip stock that's down 50% for the hell of it. No, absolutely not. Every stock I buy, I make a case for you, both technically. Sometimes I'll add in some fundamental notes. That's long-term support, really nice support. And again, on the whole thing that I just earlier was talking to you about in the ag input sector, about how I take smaller position sizes in smaller cap stocks, penny stocks, things like that. It works the other way when I take blue chips or I trade treasury bonds. I take larger position sizes. So my first target's hit 6%, but this to me was a bigger position because it's Pepsi. Pepsi is you're not gonna gap down 30% on a bad earnings miss or a drug they had in stage 2 clinical trials. Obviously, Pepsi's not a drug maker, but my example there is in biotechs. Most people think earnings are the only time you can get clocked on holding a stock as a swing trader or investor. It's not. Biotechs randomly out of the blue announce positive or negative clinical trials from FDA releases. And so, on any given day, you can wake up to a massive gap down or gap up. But again, on Pepsi, not a lot of big surprises between earning dates, and even then, it's a blue chip, steady Eddie dividend paying stock. So, so my point is, you could take a double sized position in this, or 1.5 time position, and that turns a 6% profit into a 9-12% profit, and that's it. So, and like any trade, we entered that right off the lows. So at this point, no reason to let a gainer turn into a loser. This was a trading range we broke out of, so it should hold above there on any back test. So my stop would be just below that R1, which is first resistance. Now technically that's S1. Resistance, once broken, becomes support. So that would be your ideal stop. Okay, and we'll wrap it up with just a quick update on the grains. Wheat, remember, wheat is buy at long-term support. I don't have it here on this chart. I didn't cue that chart up. It's at a multi-decade uptrend line and has been for a while. And so we've been bouncing it off the 60-minute charts, but I also have longer-term targets. And again, I think a solid break above this fourth target on the 60-minute chart will open the door for a bigger move up. So far, a higher low. We'll see if that sticks, but we already hit T1. That was my first target from the last trade here. We had a breakout and a back test there, objective long entry. Now we need to take out this level to open the door for these next targets. and then ultimately take T4 out, and then I turn my focus back to the longer term targets I have for you on the daily chart. There's that trend line. And again, wheat is the only one of the three big grains suck and win. I also have the sister trades out there for you, corn and soybeans. And corn and soybeans, remember, they did bottom back here when we started taking them. Actually, that one was back here. This is when I started getting bullish on them early 2024. We hit my first target. We pulled back, made a marginal new low. I addressed at the time that would be within a reasonable stop for anyone targeting T6. So, not stopped out. We entered it again on the bigger divergent low. Hit T1 again. So that's just a big level that if and when taken out, should open the door to my longer term targets. And nice double bottom so far with positive divergence. So it's reversing pretty nicely off this most recent divergent low. You can see it there on the 60-minute chart right there. This is our divergence lines now. Oh, let me borrow that other one, delete that one, stretch this over there. That's the same divergence I just showed you on the daily chart. So, and then soybeans, SOYB. Again, not much to say. This is when we took it back here off the 20 or kind of multiple entries, but I definitely highlighted this divergent low. We went up, hit my first price target, pulled back, made a higher low. We've been making higher lows. This is what you want to see. However, you need to take out. We've hit T1 twice. You can see, so this is just one big basing pattern. So basically a pop over my first price target, about 22.73, should open the door to any and all my price targets there that I have for you, longer term price targets. And the point is, if we loop back to the beginning, towards the beginning of the video, those ag input stocks should continue to benefit if these agricultural commodities start to go up. I usually see the two sectors in tandem. So in this case, we got in early on the grains from a longer term trade perspective. Remember, we've had multiple, I've highlighted a lot of these 60-minute divergent highs and targets being hit on wheat. Where'd it go? Yeah, we can go back to the 2-hour chart. Turn these back on. So a lot of these, we've hit these T1 levels. T3, we had negative divergence right there on the 60-minute chart, divergent low, divergent high again with a target hit, one of two targets, T1, T2, the second target pulled back. So, these have been like the gold mining stocks, and even gold and silver, great swing trading vehicles as they kind of grind around in a range. Like I started out in the video, gold kind of going nowhere now, and GDX for a while, but yet a lot of swing trades in GDX in recent months. And in gold as well, and silver. Okay, let me wrap it up there. Again, that's not an all-inclusive, but it's a lot of the recently highlighted trade ideas, and just kind of gives you both my insight and kind of trading strategy in the market right now. As long as the music's playing, what kind of stocks I'll be looking for. This has been Randy Finney with Right Side of the Chart. Have a great day.